so Mo from Offa. Today we just want to have a quick catch up with you, find out a bit more about what you do, how you help your clients, and just get a bit more background about Offa. So why don't you take it away?
Sure. So I work as a business development manager for Offa Finance. At Offa, we offer Sharia compliant products. That is your short-term finance, which caters for your bridging and development finance. We also do light refurb and heavy refurb. And we also have a term buy-to-let product, which is for your normal equivalent to your buy-to-let mortgage, so that you could take up to 40-year term on there. We're also launching in Q4 our home purchase plan. So that will be our regulated product for customers who want to live in the property.
Okay.
I look after the bridging and development side. I work with intermediaries, brokers and introducers, and we look at ways that we can help clients with their financial needs and tailor products for them and deals for them to make sure that we can help them to acquire or refinance their relevant properties.
Okay, amazing. I mean, well, we get loads of inquiries from potential property investors. I mean, there's a big scale when it comes to property investors, right? There's people that are just starting out, people that are quite mature in the market, that have had, loads of properties, and some people in the middle, right?
Yeah.
So it's good to hear that you do a whole host of products that can help all ranges of clients, right? So with the property market right now, where do you see a lot of value? Where do you see people investing? What types of assets and how are they purchasing those assets?
What we're seeing quite a lot of at the moment is a lot of customers are looking at buying underdeveloped properties. So properties with issues, not major issues, small issues where it needs a small renovation and
non-structural.
then non-structural works or light refurbishments. And they want to take on those projects, do the work themselves generally, might have a builder to help out and get a bit of uplift on the property. And then they're looking at, some are flipping them, so they're selling them on, and others are refinancing them and keeping them for passive income for longer term.
Okay, I mean, just for the benefit of some of the viewers that might not understand the terminology when it comes to this, these property investment things, right? So we're talking about light refurb, we're talking about heavy refurb, and you mentioned there structural, non-structural. You guys want to explain a bit more about that?
Yeah, I can do. So light refurb basically means, from our point of view as a lender, is anything that doesn't require planning permission and doesn't change the structure of the building. So that could be painting and decorating, putting new kitchens and bathrooms. Heavy refurb would be classed as anything that requires planning, which generally means if you want to add extensions or lofts, that's when we will call that heavy refurb.
But even the light refurb stage, it's got to be a rentable condition in the beginning, right? So you can't say when you do a light refurb, but it's got no subfloors in there, for example. That's not structural, but it means there's still floorboards missing, right? So we've got there's a fine line how you do it. So the light refurb side of things, it's can someone move in it tomorrow to rent out? So is it rentable as it is? It may not be the most perfect, cosmetically, all kind of looking beautiful, but is it rentable? Is it watertight? Is there a roof on it? The doors and windows shut? And could you spend a night in there type thing? Is the best way of describing it from a valuer's perspective?
That's correct, yeah. And if it's not up to that standard, this is where bridging helps customers. Because if you're going for a buy-to-let product, you have to be at that standard where it's rentable now. So you need to, so the tenant can move in tomorrow, basically. Whereas with a bridge, you can acquire the property, do the work, and bring it up to that standard. Prior to other products, they don't give you that facility to complete and then do the work. They will value it as is today. What is it like today? Whereas with bridging, we can have that flexibility. We can ask the valuer to look at it with the work done and give us a value.
So you don't just use bridging to buy at auction then, right? Because traditionally, most people think bridging is used to buy a property at auction. So when you're buying property at auction, right, you've got 28 days to complete. From the minute the hammer goes down, you put your 10% deposit down, and you've got literally, 28 days to complete, right?
Yeah, generally.
But I think some lenders now not some lenders, some auction houses are bringing that to like 15, 21 days some cases. They're making it really tighter and tighter, right? Depending if, say, a distressed property, so bank repossession or something along those kind of weird, wonderful things like that. So that's where you use bridging to go with it. And a lot of people think bridging's used for other purposes. It's expensive to buy, I can get a proper mortgage elsewhere. Yes, the rates are different, but the money's released so quickly that you don't need to wait the full term, and you can buy property under value, right?
That's correct. Yes.
And it could be a heavy refurb as well.
So hold on, you're saying if I was to buy a property right today, and let's say it wasn't in a rentable condition, but I was able to get a good deal on it, maybe it's below market value. I just took it from an estate agent, had a good deal on, went in, bought the property. So you're saying a mortgage wouldn't be the best product for that, right? It
Definitely
would be
not.
a
In my
bridge.
opinion, I would not even give the client the option to go for a
Right.
mortgage, purely for the fact that the lenders out there, traditional lenders, not a bridge lender, but a traditional lender, wouldn't lend on it because it's not in a rentable condition.
Okay.
So imagine this: a buy-to-let property, right? It's got to generate income from day one.
Okay.
You're buying a business. So a buy-to-let property is buying a business. Your residential home, you're living in it. So if it's not as nice, you can still live in it, pay the mortgage for your wages, that kind of jazz, right? But a buy-to-let property, in the nature of what it's designed to be, a buy-to-let property,
Yeah.
it's deemed to generate income as soon as possible. So as a lender's perspective, whether it's Offa or anybody else out there, they're looking at it. If this work's going to take you 6 weeks, so you've lost out 6 weeks of rental income. So as you as an individual, your average mum and dad who's trying to buy their first property right now, forget seasoned investor. Let's look at your mums and dads right now. They're looking to take this property on board. And now they've got to cash flow 6 weeks worth of rent or mortgage payments and the build cost. Because they're not experienced, they don't understand these problems and pitfalls. So from a lender, they need security. See, market works by security. Me and you may take a risk on certain things, right? Right or wrong way.
Yeah, that's correct.
But
yeah.
the lender look at it from a security point of view.
Yeah, we have
So
to
if it-
assess
assess
all,
it, right?
assess all the hypotheticals that may happen.
Yeah.
So what will happen if there's a structural issue with the property on further inspection?
Right.
What are we going to do then if we already financed this property? What if the borrower has credit problems and can't find the exit for their bridge finance? So we have to look at all of these things when we're assessing the risk. One of the things that you mentioned regarding payments, a lot of people may not be aware that with bridging, we can do what's called retained profit or interest. That's where we deduct their payments up front. So for that term of the bridge, the customer doesn't make any payments until that property is then exited and onto a buy-to-let, for
So for
example.
example, they can have a 12-month bridge.
Yep.
So if they wanted to borrow 25, they want to borrow 75%. You'll give them 75% loan to value,
Yep.
less the fees and costs.
Less the fees and costs. Yep.
You could potentially knock down to 65, 70%, depending how you structure the deal to go with it, right?
Yep.
And they're given that, say, net at the end of the day, after all costs and fees are taken out. So they put the top up in to get their own deposits sorted out. But they know for a fact the next 12 months,
They're
their
not
cash
making
flow
it.
is protected.
Because they're not going to be making payments
They're not
for the
gonna
next
be
12
making-
months.
Exactly.
That's correct,
They're not
yeah.
servicing the debt.
Right.
So
That's right.
like your home mortgage right now, or if you're paying rent or mortgage at home, you're living in your own property, you're servicing that debt. You're making a small contribution every single month towards the bigger thing. And that's where it changes from there.
Right. So that's where the bridging products are more specialized for the investors.
Exactly.
It's
Yeah.
definitely an investor-led. What we found so far in the market right now, and the plans that we're talking to, it's definitely an investor-led product. Someone who knows what they're doing, to a certain extent.
Yep.
You can educate somebody. It's more for a semi-seasoned investor or someone who knows how the market works. You know,
Interesting.
there are there are people out there trying to sell these bridge deals. You buy a property below market value, 40 or 50%, you pay for it, then you refinance out again. Those theories don't work because you can't find the asset that cheap. So realistically, you got to work your numbers. You got to have that honest conversation with your client, and sometimes you got to bring to reality with them. And a lot of people won't. If the client thinks they've got, arguments say they've saved 100 grand to do an investment with, sometimes that's not enough for the kind of properties they want to buy.
Yeah. Yeah.
In their mind, they're thinking, I can buy this really cheap, I can haggle the guy down a bit, and let's try and get a deal done. But not necessarily all the time. They don't factor in legal fees. Mo, how many times have you spoke to clients right now? They don't factor in legal fees.
Yeah,
They just think
valuation fees, legal
valuation-
fees,
even application fees.
application fees. Yeah. Yeah.
And these are fees which no one's trying to hide from them. But when you're working at your cash flow, or when you're working out a business model to buy a buy-to-let property, you've forgotten. Some people, I've had a client the other day come to me saying, legal costs cost me no more than £1,000. I'm like, in what era was that working?
Well,
at?
yeah.
That's like the early 90s type thing. But right now you're looking at, 3, 4, maybe £5,000 in fees, depending on the speed. See, everything, I don't know if you found this as well. Time, the quicker it is, the more it costs, right?
Yeah. You can look at your case, for example.
Yeah, we had a case not so long ago, and it was a phenomenal case. Client was on board, absolutely, everything ticked the boxes in that one, right? But we Well, within the client, everything, there was a general overview of the auction house didn't disclose a lot of information clearly. I think this is where we come down to auction disclosure. We assumed it'd be a 28-day completion.
Sure.
Client thought 28 days. No one checked any further until he got the final contract. So this is from Mo's advice, believe it or not. We checked it, read over it. They want us to complete within 15 days.
Oh, wow. 15 days.
15 days. And to be fair, Sediment to Mo and the team out there, we managed to get that timescale completed on time
Yeah.
with 2 bank holidays.
Oh, wow.
Yeah.
How did you guys get that done?
Relationship.
That's it. Work doesn't finish at 5 o'clock, unfortunately. We had to. We had to work over the weekends. We had to, get documents over, and that's where having that relationship helps. I could pick up the phone anytime, and credit to you guys as well. Anything I needed, straight away response from Nelesh. Nelesh, I need this. I'm onto it, Mo. Don't worry, you'll have it in a few minutes. Got the email over. We've got the valuers. Where again, relationship helped. Our turnaround time from inspection to report was 4 days.
Oh, wow.
Because we have a really good relationship with the valuer. We got that back in 2 days. And
I think the valuer liked working with you guys, and just collectively, everyone the common goal was there.
yeah,
I think that's
yeah.
the difference right now. We weren't, before the case that we've submitted previously, right?
Mm-hmm.
You go into a portal, you put the case details in, you put the client name in, you put the phone number in, and hope for the best type. And it sits in a queue.
Right.
And you
Yeah.
get a case reference number, all that kind of jazz, right? Working with these guys over here, it was more one-on-one.
Okay.
So as much as we're invested in the deal with the client, Mo and his team are invested with us just in the same situation to go with it. So
Right.
now our clients don't care where we place it. We've had these conversations with them before. They don't care how it's placed, who it's funded with, or anything to go with it.
So you know what? You're talking about this case here, right? Now, let me just pick out something from this case. So again, back to Offa being an ethical lender and a Sharia compliant lender, right? In this case, we're talking about where did that come into play and what was the client's understanding of that?
It didn't.
Oh, wow. Really?
It didn't. It did and it didn't. So
We still
I
did.
think
No, I presented the case on the merits of the deal.
deal. That's right.
Yeah, so the merits of the deal in terms of, so when we look at the spreadsheets, like we look at analysis to go with it. You know how we work as a company, right? We can't just present one option.
Mm-hmm.
Presented 2 or 3 options. And Offa's proposition looked on paper for the client the best solution for them. One, on the timescales, the rates, the productivity, the relationship, all that kind of jazz. And then we placed it there. And then we passed it over to Mo. Then it'll get handled slightly differently, right? Wouldn't you agree on that one?
Yeah. So once it was passed over to me, I think the ethical side comes with the transparency. So, as Nelesh mentioned before, we were under the assumption that it's a 28-day completion. First thing I asked Nelesh to check, please ask the client to get the contract. Because I know there could be a discrepancy. Because we're working to the client's timescale.
And is that from your experience?
That's from
You need to ask
experience
that.
and, just some market trends recently I've been noticing auction houses are reducing the completion timescales. Generally, it's always been 28 days. Now, I found on a couple of cases it's been 21 days, then it's been 15 days. So, soon as Nelesh told me, yep, I've got the auction case, this is what it looks like. I gave him the initial figures first. I think that's what you presented, didn't you? You had a spreadsheet for me to
Yeah, Dick in
help
terms
you
of
out
quite good,
with.
and the client had his spreadsheet with the costs and stuff on them.
Costs and stuff,
They're
so
quite reasonable, those
yeah,
costs. To be
yeah.
fair, he done his research on that
He's
one.
done his research and it was, it was packaged really well. So
Right.
for me, it was just a quick look, fill out the blanks for him, send it back to Nelesh. And then once I got the go ahead, like, okay, he's happy to proceed, I think that's where the ethical element come in. So straight away, ask for the contract, get the date. And I think from that point onwards, me and Nelesh were very clear on the expectations, what could go wrong. And if it did go wrong, we had contingencies in place, what we could do in order to get the deal over the line. So a lot of people don't know that there's a notice to completion, additional 10 days. We didn't want to activate that, but that was in our pocket. And we didn't want the client to be too stressed about it. So we had that in our pocket. But we set the goal from day one. So when I took the case on with my underwriting team, with our valuers, with our solicitors, we set the goal. We're completing this in 15 days. What do we need to do? And everyone got allocated their tasks. Everyone got allocated their requirements. And that's it. We just worked together,
And then we found a solicitor that can complete those timescales from a lender's perspective.
Yeah.
You can go to market and find a nice cheap solicitor that'll take 3 months to complete.
Right.
Or you pay someone a bit more, which we did in this case.
Yeah.
But to be fair, I say a bit more, but then my client was so happy with him, he's given me all his legal work moving forward.
Yeah.
So he's got a client for life there. From
Yeah.
a relationship.
So guys, what I just want to touch on here, right, is what I'm hearing a lot of is the service you guys provide, right? You know, you talked about you knew the right questions to ask from your experience. You know, you looked at the contracts, you knew what to send over at the right time. You guys obviously worked overtime to get this done. And I'm just thinking, as a property investor, right, there's a lot that someone would have to consider. You know, they've obviously got a lot on. They've had to raise that money from somewhere. They're worried about what's going to happen to that property. They're probably worried
Yeah.
about the work that they need to carry out.
And this is where it's really important that procuration fees and arrangement fees are discussed, because what the client doesn't understand, they say, oh, I'm going to pay, for example, a 2% arrangement fee. But what does that 2% arrangement fee entail? That means the work that needs to be done on this case is getting done day and night. A solicitor will charge you out of hours. We don't. We have an arrangement fee. Now, the amount of times me and Nelesh spoke out of hours, on the weekends, on a bank holiday, you know, that's his time away from his family that he's taking that call, he's sending emails.
And vice versa. as well.
Exactly. So when a client says, oh, you know, I'm paying an arrangement fee, what is it for? This is exactly what it's for. That behind the scenes stuff that the client, he's a busy guy, he's got other, you know, he's got work and he's got other commitments. He's parked that with Nilesh. And now that's Nilesh's stress. I need to get this done in 15 days. And that's what the arrangement was. And that's what the fee is paid for, because whatever it took to get that deal over the line, that work was put in. And, you know, it probably, you know, cost more than 1% of Nilesh's time for that case.
Of course.
But
Yeah.
it's fixed at that, you know.
No, but the client needs to get service. It boils down to what
Yeah.
we always talk about in business right now. Like, if the client can't get supported, we're in the wrong trade.
We're in the wrong trade. That's
Okay.
right.
I mean,
So let me ask you guys this, right? You touched a bit on fees there, right? There's obviously fees that go into these things. Now, a lot of the times when speaking to clients, it's what they tend to focus on heavily, right? Oh, it's going to be the fees are this much.
Yeah.
But ultimately, the end value and the money they're going to make is going to offset those fees, right?
100%. So you can go to a broker that will charge a cheaper fee.
Okay.
So there's two types of fees, right? There's one set of fees we get paid by the lender with.
Right.
So the lender like Offa right now will pay us an arrangement fee or a procuration fee to go with it for writing business through their channel. It's like a commission, which we disclose up front. So understand this, whatever we make as a company is fully disclosed.
Okay.
So there's nothing that the client doesn't know what's happening in the equation, right?
Sure.
So there's no used car salesman tactics on this
Yeah,
situation.
what ethical is on our term sheet.
Right.
It's on our
We
term
make it
sheets from day one, literally,
clear.
before you even go with the deal. So even when we get indicative terms, it'll be on there as well. So we're going to make this much out of the deal, and so much is going here, so much is getting paid here, we're getting paid here. Then on top of that, you have something called a broker fee, which is an engagement fee we can charge separately to what the lenders are paying us to how much work's involved.
Right.
So if a case is complicated or the client's, it just shows is a client committed more than anything else.
Sure.
You know, so we look at charging a small fee. It could be anything from a couple £100 to £1,000, depending on the case.
Okay.
It just makes sure the client's locked in.
Right.
So it's investment.
So ultimately, these are fees that need to be paid, right? Because, you know, if I was to invest in property, I need to get this property funded. I need to get it funded quickly. And I need to make sure that I'm going to make money on it.
And I think this is where transparency is important.
Right.
So when I'm speaking to clients, direct clients or through brokers, I always break down the costs. So what are your finance costs that are going to be whether deducted or serviced, right? Rolled up or serviced. And then you have your upfront cost. So application fees, valuation fees, legal fees, arrangement fees. For them to understand, this is your total, this is part of your investment. You have to factor this in, because there's no point of paying if your property uplift is only going to be $5,000 and you're spending 15 grand on fees and, you know, all the other stuff, then does the deal work for you? And I think this is where in the past maybe bridging's got a bad reputation, because,
Of course.
you know, it's an environment where people just want to get the customer in.
Right.
Do you know
They're not worrying about the exit.
Yeah, exactly.
And
I say the same thing.
Yeah,
It's all about the
so
exit.
What my first conversation with all any case that I get, we have a very long and detailed conversation about how the client will exit this finance, this
Right.
bridging finance. Are they going to sell? Are they going to refinance? What's happening? What the time scales look like on that, and what's already in place,
Right.
and what their plans are going forward. If that all makes sense, then we will look at, okay, let's see how we can make this deal work from a finance point of view for the client. And that's where, you guys come into play, where with Nilesh we worked really closely looking at all the options. Client, does he want to sell? He might keep it as a buy to let, and we look at the term. So it's really important, we always leave a bit of leeway. So if somebody says I can get this done in 6 months, from our experience, collective experience, I would say to Nilesh, does this seem feasible? If this is an experienced person that they've done loads of transactions in the past, potentially it's doable. If somebody's got background information that we're not aware of, then we might say, you know what, you can do it in 6 months, but take it for 9 months. That gives you that extra bit of leeway. And
It gives you a bit of just time for the client,
Yeah,
I read
yeah.
something the other day on the news that they said it takes an average time of 156 days from the point of advertising a property to actually selling it.
selling it, yeah.
So from the point of completion.
Wow.
A lot of people think that, I'll put my property on the market tomorrow morning, it'll be sold within a week.
Sold within a week,
Because it's
yeah.
such a great property. Everyone thinks their property is the best property in the world, right? Every investor makes the same mistake, don't they?
That's
they think,
correct,
they think
yeah,
there's
yeah.
the best property in the world. I'm going to price it really competitively and I'm going to get an agent to do it. But it takes 156 days.
Wow.
Yeah, yeah.
So now you factor that in to a bridge product. You've taken 3 months to buy it, renovate it, do your light works to go with it, right? Then it takes 6 months to sell. So you need a 9-month term. Then the buyer may have issues.
And that's where you guys will advise the client, right? And
We would always say,
you
yeah.
guys are backing the client.
Yeah, so we will look at that will be like the first part of the conversation, the term, the exit strategy, what the long-term plan is for the client. If that makes sense, then the deal will make sense. If the exit doesn't make sense, then
not making sense.
the deal's not going to make sense in the beginning. So it's kind of working backwards. So to ensure that the client is not stuck in a bridge finance, because bridge finance is, we've never defaulted a customer. That's part of our, in Offa, we've never
Oh, wow,
defaulted
never.
any customers. We've always worked with them and found solutions.
Amazing.
So that we want to maintain that. So for me, analyzing the exit, making sure that the criteria, the customer's not over leveraged, the customer, if they come directly, they get independent advice. We don't just force them in, because some places it's a very sales environment, but it's service as well. We can't just force somebody. If somebody's not sure, I will tell them go away, get independent advice, speak to some people that you may know, or a broker or somebody who can guide you. That way you're not making that decision on your own. You've got somebody who can advise you and who can guide you through the steps and show you what alternative options may be available.
Okay.
That's
So
where the ethical lending comes into play. See, that's
Yeah.
why we like working with Offa, because it's the ethical side of things. It's the rules they put into place when they do fund the property. There's really cool rules in there that how the property can and can't be used,
Oh, yeah.
which ethically make a lot of sense.
Yeah, yeah.
You can't run it for certain business activities are not allowed in there. They'll repossess
yeah.
it. So if they did that, if all lenders did the same situation, these crackdowns wouldn't exist, because the terms of the mortgage wouldn't allow it. So these are where people exploit certain things that don't stack up where they're meant to stack up, right?
Yeah.
And unfortunately, it's always the minority in the majority that ruins things for everybody else. And I say that in the context of bridging. Traditionally, it was a very negative product to have, because the lenders wanted you to default. They'll come back.
They'll
They'll give you
repossess the property,
see,
yeah.
basically a bridge, right? The way I explain to some of my clients right now, it's like borrowing money from the mafia, right? You got to pay back on this day in full, and that's it. No questions asked. It's one of those hard and fast rules. There's no give me an extra day or two, because you signed a contract that this debt will be paid in full on the 1st of next month. No, sorry, nothing. I said 12 months from now it'll be paid in full. And then they're relying on you sometimes not to follow through, because they know you bought the property cheap already. You've already paid a colossal rate of interest to be in that position, because you're servicing the rate slightly higher because of the way the money's released to you. And they know they can come back in again and buy a property which they've got at least a minimum 25% stake in you put in already, right? Plus remedial works to go with it. So now you factor in all that kind of stuff, and you've uplifted the property. So you spoke about this earlier on in a previous conversation about GDV's, gross development value. So you bought the property for, say, I don't know, £1 million. And you've added all this work to it, and it's now worth 1.5. But if you don't exit that bridge on time, the bank will take it and made the 500 grand profit.
Oh, wow.
Not the bank, but I'll say the bridge lender.
The bridge lender.
So the bridge lender, that's where bridging gives you these weird vibes to go with it. Would
Yeah.
you agree? So now we've come back from a place from a lending company or a brokerage, is how can we turn this around? How can we make this really beneficial for the client? Ethical, clean. And it's okay to say no to business. And we've had deals come through where the clients had one expectation, but we couldn't deliver.
Ultimately, you got the client's best interest at heart, right?
We have.
That's
If we
right,
can't
yeah.
fund it in the way which makes sense, and I get the lenders on board, we can't do the business.
Yeah. And even when we do complete on any case, that's only half the work done from my point of view.
Oh, wow.
Because until they exit that bridge, my job is not done. My job, just getting the business in, is not enough. We need to make sure that that client has exited. The whole purpose of finance is to make sure that you repay your finance, right? There's no point of just giving out finance if you can't get the payments back. So from, I always set milestones, make contact, so like with Nilesh, I've already got it on my diary. Month 3, make contact. What's happening with the exit? What we're looking at. Month 6, have we got application in place already? Or is the market on the property already? Month 9, where are we? Have you had any offers? Or, have you had an offer on your mortgage? How far are you going? How far are you into the process? So that's automatically factored into every case that I do. So it's not just, oh, the deal's done, congratulations, complete. That's just half the job. A lot of the times we have that conversation when we complete, that sigh of relief, all that work that's gone into it, completed. And I always remind the customers, this is only half the job.
Because they'll get
The work,
complacent.
yeah, they get complacent because they think, I got a year, but
Yeah,
like
How
Nilesh said
quick does the year
before,
go by?
Mate, so much
156
happening,
days to
yeah.
complete a mortgage. So you need to be, that's to complete once you've
Once you've
started
got
the
the offer,
process, once you've got the offer.
Once you've got the offer
So
on that one.
what if you don't get an offer?
So this boils down to...
Exactly, how long is that going to take? So you have to kind of be straight away on the ball.
Sorry, and that stat was a London-based property, yeah?
Yeah.
So I apply that same statistic for a property, say, Birmingham upwards. You got to add another 50, 60, maybe another 100 days on top of that again.
On top of that,
Because the market up there, it's moving, but not as fast paced as the London market.
Okay.
So a London property, or within, I think we spoke about this earlier on, a Greater London, within the M25, that property will sell within 156 days. From advertising to getting a valuation, getting booked, finding a buyer, funding, all that kind of jazz, right? Because that's the market sits. We go, say, I use Manchester, prime example. And I put in the same blanket as Manchester, Leeds, Bradford, all those kind of play all in one. So there's no discrepancy anywhere right now. So anybody outside the M25. And those properties, because it's traditionally a renter's market, you won't find that many owner-occupiers. So they've always been brought up in a concept of we rent.
Okay.
So investors will buy those properties because the yields are phenomenal. In Mo mentioned, you got upwards of sometimes 10% yields, right?
That's right, yeah.
Which is brilliant for them if you're in that marketplace. But as an investor buying it on a bridge with a view to selling it, the numbers are not going to work for you. And this is where the conversations that people talk about our fees, for example, right? And this is where we add value in what we do by giving this information to them. Some people say, you know what, thank you very much, I'm not interested, I'll still crack on with it, which is great. But if you don't give someone both scenarios, it's not necessarily, you're not giving them any advice, you're just giving the options of this is potentially, have you thought about this option? And a lot of these guys are not London investors. So they're not local investors, they're investing outside the area.
So from a finance provider's point of view, packaging the case is essential. I work with so many different types of introducer and brokers. When you package your case properly, that's when the outcomes are the best for the client, because that means the broker has done their part. They've taken all the correct, they've done their facts find, they've got all the correct information. They know what the plan is for their client, and they can relay that to me in an email. And I should be able to read that and know, okay, where this deal is going. And that's one of the services that you pay for, because some brokers, I've dealt with, they'll send you an address and a postcode, and we need this much.
Okay.
That's all you're getting. Now, with me, that doesn't work. So straight away, I'll email them, let's arrange a call. And the first thing I'll do, I'll go through a whole list of questions. Tell me a bit about the background of the client. Tell me a bit about their experience in properties. What do they do for a living? What their goals are for this property. Are they looking for passive income? Are they looking for capital growth? Are they looking to just buy and sell? What is the plan? What's the exit, obviously? And then we will then look at the deal specific numbers. So if that doesn't all make sense, this is not going anywhere as far as I'm concerned. So these are the first key questions that needs to be packaged properly. Because if it's packaged properly, anyone can pick that up and say, yes, this is good to go, or no,
It's
this
good
is
ethical. It's good ethical business, right?
Yeah.
And you really, really cool, like a really interesting point earlier on. Experience. See, why is experience important when buying property right now? So people think, I bought my own house, so I can go and buy another one. I've done it before. I can do it again, right? So why do you think? Like, and I ask my clients, so why do you think experience is important? And it boils down to two. I personally believe it boils down to one or two things right now. One is, can they exit the purchase? In terms of, can they execute the purchase? Should I say? Sorry. And secondly, if they're doing any works on that one, have they really thought about it? Painting a house doesn't cost 200 quid. You're talking grand, 2 grand, 3 grand, depending where you're playing it, right? People think it's a nice cheap.
Yeah, it's like £100 a room in some places, even more, depending on the size of the room.
If not more than that.
And you've got a 4-bedroom house, 5-bedroom house, you've got your hallways, you've got the rest of the...
I'm talking about labour costs, forget the material side of things.
Exactly, yeah, that's just labour.
Right now. Labour's... The market's evolved, man. Like, it's not what it used to be. But boiler cost. People think I was going to put a new boiler and I'll go down to merchants to get one for like 600 quid. Yes, the boiler costs £1,000, but it costs you £4,000 to fit it.
So when someone's doing any type of refurbishment work, whether it's light or heavy, we always request the schedule of works and the build cost. And the amount of times...
What's the schedule? Before you move on, what's the
schedule of works is basically a list of the work that they're going to carry out in the property and the approximate timescales they're looking to do this.
And the cost, and a rough cost as well.
Yeah, and then the build cost should correlate with the amount of work on the schedule that they're planning to do. So the amount of times that, I'm not a builder by trade or a tradesperson in any way, but just from experience, when I see certain prices, I'll be like, this needs to go back. And you need to, because a lot of the time they make it up. The clients will make it up themselves.
Oh yeah, classic.
Yeah, £200 to do a paint job. I'll get a kitchen for £2,000. I'll do my bathroom for £2,000. I'll be like, okay, where's your labour? So you haven't put a labour cost in. What materials? What spec are you going for? So you're telling me you want the top end market price, the GDV, which is the gross domestic value, once all the work's complete, but you want to use the lowest end materials to get that highest price. That's not realistic. So you need to obviously get better quality furnishings to get that higher price. So
and that depends if it's going to be, the exit's going to be a sale.
Or
and if it's rental markets are pretty much consistent. You're looking at a couple £100 a month difference depending on how it's been,
how good it is,
how finished it is, right?
Yeah.
But then it depends on the marketplace as well. So you can't, like, prime example, you can't have a property in the heart of Mayfair, for example, that's been kitted out with an IKEA kitchen. It's got to be, if you're charging rents of that kind of equivalence, it's got to be...
The person is going to want that quality.
So they know what they're looking for. So it's all relative. So this is where I look at schedule of works as well and say to the client, this is, something doesn't stack up.
Yeah.
So either go back, this is even before the purchase even happened. So this is that early, I would say, introduction stage, or even before terms have come out.
Yeah.
We'll have these conversations.
And these are the things, where going via a broker and having a good relationship with the finance provider, these questions are stuff that we discuss. So even in your last case, do you remember the wall?
The wall.
Last minute come up, the valuer said there's a firewall missing between the two properties.
Oh, wow.
Now, that was highlighted. It's a 15-day transaction, don't forget. That was highlighted with 4 days left to go before we scheduled to complete. Soon as I saw that day, I sent the report and what the remediation work that we'll need in order to complete on time. I sent that to Nelesh. Nelesh got that over to the client by... I would say 6 o'clock that evening.
Yeah.
We had the build cost, the schedule of works, full invoiced from a builder saying that I will put up this firewall. This is how much it will cost. This is what we'll do. So that was then added as a requirement onto the completion. So post completion, these works it was satisfied.
This is where you have to have. See, a lot of people don't realize the client has the same amount to play in this process. So a lot of people sit there thinking it's the broker's fault, it's the solicitor's fault, it's the lender's fault, whatever. The client needs to take full responsibility. If a question is raised, we want it back straight away.
Yep.
If I'm chasing the client endlessly, it's not going to work. And thus, it justifies the fees and time involved.
Yeah. And
There's all a cost. So if we're chasing them constantly for something so small, they've got to be committed on it. Because ultimately, at the end of the day, right, if the deal goes south, which sometimes it can do, right? Auctions can go wrong.
They do go wrong.
They do go wrong, right? But there's other ways to get around it, which we spoke about. But at that point, the clients could be invested. There's got to be equal buy-in right now. I think that's what a lot of people don't understand right now, and a lot of investors forget this, that they're equally in the equation as everybody else is as well.
Yeah, yeah. And I think that's where it comes down to when you have your initial conversations, the understanding from the client, what their part in all of this is. You can't just hand everything off to your broker and expect the finance provider to then do everything with your broker. It doesn't work like that because the requirements are from the person who's going to own the property. You know, me and Nelesh can't make a decision on, you know, whether you're going to carry out X work or Y work and how much it's going to cost you. You need to go and source that from your builders and your contacts to say, this is how much it's going to cost.
Then you go to a property investment company.
Exactly.
Then if that's the kind of investor you want to be.
Yeah.
Then you need to go
Who's
to a property investment company. There's companies out there that specialize in this field.
Yeah.
Where you pay them a small transactional fee.
Yeah.
They'll find the property, they'll renovate the property, they'll rent the property, they'll do the whole lot.
Right.
Yeah. So
But then-
coming back to that, so that's what a lot of your mid-experienced portfolio landlords are doing now. So when they're looking at projects for HMOs up north, they're getting
For the element of people watching, what's an HMO?
HMO is a house of multiple occupancy where there's more than one family that lives in that property. So each room is rented out to separate
So
individuals.
multiple ASTs, basically.
Yeah, multiple ASTs on that property, and they can vary from 3 beds up to 6 bed. And after 6 bedroom, they're classed as a commercial property.
Definitely.
Yeah.
But anyone further information, please feel free to reach out to us, right? So if anybody needs any further information on these sort of things, when you're watching this video, please reach out. We're happy to
Definitely.
support you in the process.
Yeah, same way, Nelesh, we also fund HMO purchases and we also help with the exit on our buy-to-let products, so we can do that as well. So definitely reach out. So going back to that, that's where the professionals come in. So on average, to convert a room in a property to make it HMO standard is roughly about £11,000. So if you're doing a 4-bed house, straight away, my understanding is, do you have 45, £50,000 to do that work? They'll be like, well, why do we need to do that? It has to be a certain size. It has to have fire doors. You know, there has to be communal areas that have to be suitable. And this is where the property consultancy companies come into play. They take on that project. So
It's a hand-holding exercise.
It's a hand-holding exercise, but you know, everyone is a professional and an expert in their field. That's why we pay for their services, right? If I could do every job, then why would I be doing the job I'm good at? You know, I could be doing every other job. So a lot of times people try to bypass these and they see it as a unnecessary cost.
Yeah.
But when you need to get your license,
That's
and then the
what's all over.
remedial work is going to cost you an extra 10 grand because you try to cut corners, that's when you realize, okay, if I just paid this person their fees, these problems wouldn't be arising.
They take that responsibility because it's a transactional service.
Transactional service, yeah.
So a lot
yeah.
of people get really mistaken in this game. Everything's a transactional based business we're working with right now. And as much as you don't want to make everything that way, it's just become the way it is.
Yeah,
And these
you know.
certain transactions, but it's not saying every single transaction works that way.
Yeah. At the end of the day, if somebody offers a service, you know, they need to be compensated accordingly, right? You know, there's only so much you can do without charging a person. You know, we don't, from our point of view, we have an application fee. We don't take the application fee until we know all the checks have been done. Other places, like for example, in your case, we did all the KYC checks, we did all the credit
deal was done.
searches,
Nothing was taken. Nothing
we
was done
done
on that one.
all
It
the
was
fraud
complete-
checks. So we know, okay, apart from the property valuation report coming back with negative information, we can proceed with this. That's when we took the commitment from the client. So that's again another part of the ethical,
But even at the same time,
ethical finance.
Talking about that, even at the same time, if a client has something weird and wonderful going on in the background, if it's disclosed early enough, there's solutions out
The
there.
solutions out there. There is.
See, a lot
there
of people have
is.
this misconception that, you know, I've got, I think we had a talk about this the other day, I've got a mispayment or a default or something. Something could have happened years ago. You know, lockdown wasn't great for a lot of people in terms of numbers of cash flow. A lot of people made mistakes and challenges which they didn't really utilize because people's incomes changed dramatically.
Yeah.
So things like that, if people are worried about, I missed a payment here, can I still do with this? The only way to find it is by talking to a broker. By going to someone direct, like a bank, they won't give you that advice. They won't pre-check it. I can sense check a file. And what sense checking means, I can speak to a BDM or even sometimes an underwriter. Is this deal meritable? Even before credit check's done.
Oh wow.
So even before a decision in principle or any further credit checks done, on the merits of, okay, are you prepared to write this business with this problem in the background? And something like that, it's a simple fix, just a copy of the credit files needed.
Okay.
You know, so I've supported clients recently in that process where you get a copy of the credit file, you talk through it, and as long as it's explainable, the lenders and the underwriters say, okay, fair enough, okay, it's a genuine mistake.
Okay.
So there's always a way, but you trust your broker like you trust your solicitor.
Yeah, and that's right. And I think a lot of the times where it's not disclosed up front,
No.
it just puts doubt as a finance provider's point of view. You know, if you're somebody who's got properties or in the property game and you don't disclose this information, then that just leaves a bad note from our point of view. As in, so what else could there be hidden? Because I'm sure if you've had a default, you've had some issues in your credit, you would be aware of that. So if you disclose that up front, like what Nelesh said, we could have that conversation, we could mitigate that. Okay, these were the circumstances behind it. It's going to come out anyway, but it just paints you in a better light. Okay, we already know about this. So when we do see it, it's not a no, it's like, okay, it is as was disclosed. Now, how can we work around this, or how can we work to support the client
What
to meet
fixes are needed? Like
needs?
lower loan to value, for example,
Yeah.
or a higher rate, or do you put more collateral?
Additional security.
Yeah, there's
You know,
always
there's
ways
other things that we can always look at, but if it's not disclosed, then it's like, okay, now what else isn't disclosed? So it just doesn't buy that trust. And you know, from a finance provider's point of view, we're very transparent. So all of our fees, all of our costs, how we operate, our SLAs, everything is very clear. So even from when I deal with Nilesh, if he sends me an email, he knows he's going to get a reply within 24 hours. If I don't reply to it, my colleague will reply to it. You know, if someone calls into our office, they know somebody will call them back within a fixed amount of time. There's not going to be no delay. If no one's available, we'll put somebody else in place. So we expect that both ways, especially when it's a time critical transaction. You know, we're not here to push the blame game. You know, this person didn't reply, that person didn't reply. So part of the transparency is when we're starting a transaction, all the parties know where we are. So the first thing will be like, what is your expected completion date? Okay, we want to complete on this date. Okay, when you're getting to speak to your solicitor, you have to explain to them, do they have experience in bridging? Because conveyancing and bridging, the legal work required is different. So a lot of people just assume this person's done my mortgage before, they know about property finance, they can do the legal work for me. And they will go there and that person hasn't done bridging.
Oh wow.
So when they start doing the legal work, they need a lot of support and they need a lot of help. Generally comes from our legal side in the end, because
No, they're very good.
you know, we have to then support the client because we have that objective. So that's where we make it clear, look, you know, if they don't have that experience, you need to find somebody who's got that experience, because your transaction priority for us is to complete by this date. So you need to make sure the solicitor that you on board also knows you need to complete on that day, and they need to understand the work that will be required to complete on that day. It's not going to be, you know, half an hour here every day and half an hour there every day. It's going to take hours and hours of work building up to the completion. So you're doing a process that takes 12 weeks on a conventional mortgage. You're doing that in the space of 4 weeks.
Or less.
Or less, 15 days, like in one instance. So you're doing 3 months worth of requirements in the space of 15 days. So you have to kind of have a understanding of how much work that entails and what kind of commitment that they needed to do that. And they charge the fees accordingly. So, you know, it again comes down to the services that you pay for. You know, you might say, oh, these legal fees are expensive, but they're expensive because the person's going to deliver. And we know if they need to work till 8 o'clock, they factored that already in. You know, then it's not going to be a question later.
It kind of sums up the whole chat we've had today, really, in terms of where we are. The biggest thing we all take away from here is relationships.
Yeah.
It's just having that understanding, having that relationship, and then that'll just drive where you want to be.
Okay, amazing. Yeah. So for those people out there listening and want to get into property investment, one of the key takeaways here is build a good relationship with a finance provider, build a good relationship with a broker, trust these guys to take you through the process. As you've heard, there's so many complicated elements to it, but with the right people and the right experience, anything can be possible, right?
Don't be afraid to pick up the phone.
Okay, amazing.
Perfect.
Thank you.
Thank you.